Hello, good morning, ladies and gentlemen. Glad to be back here. So if you can see my screen and you can hear my voice clearly, I will appreciate that you type in hi in the comment section so that we can get this live session started. All right, so let's see what we have here in the comment section so that we can get this going from this point. Okay, I see 254. Good morning to you. Thank you. Jeremy, good morning. 783. Kevin Adams, good morning to you. Maidam, glad to have you here once again. Good morning. Kiko Man, good morning to you. Hey Carrie, good morning. Glad to have you around. Carol 78200. Good morning. Dino, good morning. All right, I'm fine. Thank you. 200. Trust you're doing well. All right, so at this point, I will be taking this responses as a confirmation that we are good to go. I'm excited to welcome you once again to another promising session on the Extra Speed. My name is Sharif Daramola, and as usual, I will be your host for the next 1 hour, where we shall be evaluating the financial market using technical parameters to identify trading opportunities lining up for us today. Well, it has been a beautiful 24 hours since the last time we met, as most of the instruments that we reviewed yesterday actually moved as expected, and by now we'll definitely be in some level of profit at this point in time. So at this point, let's quickly run through the macroeconomic events and let's do a review of how these pairs have been doing in the last 24 hours. So scrolling through the economic calendar here, we can see that between yesterday and now we have some macroeconomic events for the Japanese yen, which happened earlier today, and in fact we have 3 events on that one. So we had the interest rate decision, which has been left unchanged, and if you have been monitoring the USDJPY, you will see how this rate remaining unchanged has spiraled the US dollar against the Japanese yen. Then we also had the monetary policy statement and the press conference. And the way things are going at this point, it appears that we might be witnessing some sell-offs on the Japanese yen. And another one that came up earlier this morning is the consumer price index, that is for the British pound. And from the look of things here, things are not quite well, as the consensus was projecting a 10.6% against the 10.7%, which happened the previous month. But what we had, the actual data we have this morning was 10.5%, which is a little bit lower than expected, and we might be seeing some sell-off happening on the GBPUSD. But let's see what the structure in the market will be giving us to decide what our next line of action will be on that one. Then in the next 2 hours 30 minutes from now, we have the retail sales for the US dollar. This is also a high impact event we want to be looking forward to, and majority of the participants in this market will definitely be looking forward to this event, and we shall be seeing the reflection of this anticipation on the chart as price action. So with this being said here, let's dive into the charts. Let's see what's really going on in the market, and we shall be using the technical structures we have there to determine what our next line of action will be. So the first commodity we are going to be looking at this morning is the USOil, and in fact the USOil has gone significantly well in our favor, at least since yesterday. And where were we during the live session yesterday? We were around here. Where was that? I think around the $80 level here. That was where we were during the live session, and we actually took advantage of this buy position during the live session yesterday, and we rode the move all the way into the $81.50 level, giving us about, how many pips was that? about 140 pips thereabouts, and following the retest of the $81.50 level, we saw some selling pressure come in here again to bring price down to our entry zone. And as soon as price did the retest of the structure, remember I told you that for those who had missed out on this opportunity, we shall be looking forward to a retest of that structure, that is the breakout of the $80 level, to give us an opportunity to buy or add more position at that particular point in time. So with the retest of structure here, I shared this on my public platform where we were looking out for a reversal pattern at the retest of that structure, and this is the 5 minutes time frame here. And on the 5 minutes time frame, we saw a reversal pattern around the $80 level where price action did a retest of that structure. And in addition to this reversal pattern, here is the bearish trend line that we have here, and this was the yardstick we used to join that retest of structure. So we saw the breakout retest of that level to give us an opportunity to buy the USOil one more time. So going back into the 1 hour time frame here, we saw the second position triggered at the retest of structure at exactly the $80 level, a level which has been a strong selling niche for participants in this market. So we saw the second breakout of that structure yesterday, and we rode the move all the way up. And as soon as price came back into that $81.50 level, just as it did yesterday, we saw some selling pressure around that area. So we identified that structure, looking out for a breakout of that structure to welcome additional position to our existing trade. And this is exactly what happened and how I go. We saw the breakout of that structure here, and it was a good opportunity to join that rally to the upside. So if you have been part of this trading journey, kudos to you for being on standby. So we have 2 positions running at this point. So we have one at the breakout of the $80 level here. Then we also have another one at the breakout of the $81.50 area. So with the current structure we have here, and for those who are taking advantage of this opportunity, well done. Kudos to you for being on standby to catch this move. What we are going to be doing now is to lock in some profit. We want to be moving our stop loss accordingly to lock in some profit here, so that we can protect our position against any sudden pullback that might likely happen at this point. So where would be the most appropriate area to move our stop loss? Well, at this point, I will be suggesting an area between around the $81 level, which is representing a previous structure here. And let's move all stop loss to that area, and let's see how far the breakout of the $81.50 level will happen. And for those who had missed out on these opportunities that we have taken advantage of since the beginning of this week, well, let's see if the market will be presenting us with another opportunity to join that rally to the upside here. So what I'll be doing before we go into the details of what our expectation is for today is to run through the daily time frame. Let's have an holistic view of what's really going on in this market, after which we shall be coming back to our 1 hour time frame to make a decision for today. So in that regard, we shall be scaling up into the daily time frame here, and here we go. So we are right back on the daily time frame, and for the sake of the session, I will be looking at what has been happening here since the month of June, that is the last 7 months. We want to see how price action has been reacting to this current structure. So look at what we have here since the month of June. We saw how price has continued to find lower highs, and as a result of this, we had this bearish trend line after connecting the series of lower highs here to emphasize some level of strength in the sellers at this point. Now, when we zoom into what has been happening here since the month of September, we saw that at this point, at this period in time, price was caught within a consolidation phase between the $93.50 level, which has been the resistance level of this channel, and then we have the support level of the channel sitting around the $75 area, to emphasize that there is a level of indecision at that particular point in time. So a breakout or a breakdown of that channel can likely give us an opportunity to either buy or sell at this point. However, during the first week of December last month, we saw how price rejected the $80 level. We saw some accumulation of selling pressure around that area, which finally led to the breakdown of that demand zone here at the $75 level. And since the breakdown of that structure, the obvious thing one will be looking forward to is a possible sell momentum that will be continued to the downside. However, as soon as price got back into the $80 level, that was where price closed last year, and at the beginning of the year we saw this selling pressure resume again right below the $80 level. Remember how important the $80 level has been for selling niche in this market in the last couple of months. So we can see we saw selling pressure here at the $80 level here in the month of November. We saw here again in the month of December selling pressure from that level, and during the later part of December stroke the first day of the year, we saw another selling pressure from that level to emphasize some level of strength for the sellers at this point. However, there is something that caught our attention at the beginning of last week, and that was the fact that the sell momentum that began this year below the $80 level was unable to break the previous low. So this is the lowest point price has ever been in the last 7 months, that is the $70 level, and the sell pressure that broke down the $80 level here was unable to break the previous low here, giving us a new low here, a new higher low, to emphasize that there are some level of bullish momentum gradually coming in this market. And in addition to this observation we had here was this impulsive move that started from the $93.50 level in the month of November, bringing price into the $70 level. So we saw the first touch here, price come back into the $80 level, and then we saw another rejection of the $80 level, bringing price into the $72 area. So the inability of price action to break below the previous structure was a beautiful signal that we might likely be having a reversal pattern at this point. So price coming back into the $80 level, remember we took advantage of this bullish momentum last week, which rolled the move all the way into the $80 level where we placed our TP target, and then at that point we had something that looked exactly like a double bottom structure, and from a technical standpoint this is a strong reversal pattern. And whenever we have a reversal pattern like this, a double bottom structure, the next thing we want to be doing is to identify a neckline which we shall be using to guide our trading activity. And coincidentally we have a neckline exactly at around the $80 level, which we identified earlier as a strong selling niche. And if this reversal pattern is going to be a matured one, we want to be seeing a breakout of that reversal pattern of the neckline area to give us a confirmation that we have a mature reversal pattern at this point. And what has been happening here in the last 72 hours has been quite interesting. We saw that price closed at the $80 level last week. We saw some little level of selling pressure at the beginning of this week, right around the $80 level. And one thing about the $80 level here is the fact that it shares a beautiful confluence with that bearish trend line we identified earlier. And one thing we said during the live session yesterday is that if we cite a breakout of both the key level here at the $80 area and the bearish trend line here, it will have been a good opportunity for us to anticipate a possible bullish wave anytime soon. So with the breakout of that structure, we were lucky enough to take advantage of that bullish momentum here yesterday, and we have been riding the move all the way up into the upside. So at this particular point in time, price is presently around the $81.50 level, where you can see that in the past that area also has been having some level of selling pressure at this point. So you can see the $81.50 level here, and even if we go as far back as the month of December, we can see that we have some selling pressure around that area. So going into the New York session today, we want to be seeing how participants in this market will be reacting to this current structure. So we shall be using the $81.50 level as another guide for trading activities for today. So with the information we have gathered here, and with the hopes that buyers will continue to push price to the upside, let's scale down to the lower time frame and see if we are going to be having a trend continuation pattern evolving right on our lower time frame to give us that confirmation or the leverage to join a trend continuation to the upside. So in that regard, we shall be scaling down to the 1 hour time frame, and here we are on the 1 hour time frame. And this is exactly what we had here. So that is the $81.50 level, which has been broken during the early hours of today. So we have a new structure that will be guiding our trading activity for today. And remember, for those who had been part of this trade since the beginning of the week, we have moved our stop loss accordingly to lock in some profit here, as we don't want to get caught up in any sudden pullback that might happen. Even though we are looking for bullish momentum here, we should also keep our options open that bears might likely come into this market, so we are already at alert to be able to mitigate against that risk. So with the information we have on the daily time frame and back to the 1 hour time frame, here we have the $80 level, $81.50 level figured out at this point. We had a breakout of that structure during the early hours of today. We have a position running. We've moved our stop loss accordingly to lock in some profit here, and we want to be seeing how this is going to go. Now, for those who had missed out on this trading opportunity here during the early hours of today, we still likely have a potential opportunity where price might come back to do a retest of the $81.50 level, followed by buying pressure on our lower time frame to give us that opportunity to add more position to our existing trade. So this is one of the setup we shall be looking forward to going into the New York session today. And in addition to a possible breakout of that in addition to the possible retest of that $81.50 level, we have this temporary bullish trend line, which I was able to identify here after citing this consolidation phase we saw here that lasted about 12 hours. So we can see that we have higher lows since the breakout of that structure. We have been witnessing higher lows from that level. So at this point, we shall be using this trend line to guide trading activity for today. So coupled with the $81.50 level, we have the bullish trend line here, the temporary bullish trend line to guide our trading activity. So what this simply means is that if price action continues to trade above the $81.50 level and this bullish trend line, we want to feel comfortable in our buy position on the US oil. Now, there is something I would like to share with you here on this time frame, as exactly price is within that zone now, and we can see this more clearly when we look at it from the 4 hours time frames perspective. Now, going back to the 4 hours time frame here, one thing I want to call our attention to is the fact that we are right within a strong supply zone, a level which has been a strong selling niche since the month of November. And in fact, if we go to as far back as the month of October, we can see how the $83 level has been a major determinant of price action. So look at what happened here in the month of October. We saw accumulation of buy pressure around this area, and the same thing happened all the way into the mid-month of November before we saw the final breakdown of that $83 level. And since then, we have been seeing a retest of that structure to further emphasize that sellers are strong at this particular point in time. And in that regard, I was able to identify a supply zone around that area. As you can see, since the breakdown of that structure happened here mid-month of November, we saw that the level here between the $82 and the $83 level has been a strong supply niche. See what happened here at the beginning of the year as well, and price appears to approaching towards that direction at this point. So with the breakout of the $81.50 level, we are already within the supply zone here. So we need to be very, very careful, as there is a tendency that sellers might likely come in at this point. And if sellers are successful, it's very likely that we might be having a huge spike in price movement. So with the information we have here, we've already moved our stop loss accordingly to lock in our position against any sudden pullback that might likely happen. Then another thing about the supply zone we have here is the fact that it shares a confluence with this trend line. Remember, we were able to identify this trend line at the beginning of the year, and as you can see, we see the trend line around this level. This bullish trend line here also giving us a beautiful ascending channel around the structure, where this trend line here becomes the resistant level of this ascending channel. So we are seeing a situation where price is heading towards that direction, which also shares a confluence with the resistant level of that ascending channel, which has a tendency of inciting another sale of bearish momentum to the downside from that level. So we need to be very, very careful of what happens around this area. And if we are lucky enough, price continues to the upside, breaking out of the $83 level, then we will be looking out for another opportunity to add more position to our existing trade. So for the current position we have here, let's have our TP target around the $83 and the $82 level here. That zone here between the $83 and the $82 level has our TP target at the meantime. So if price breaks out of that structure, then we want to be looking forward to adding more position to our existing trade. And if price we start seeing selling pressure below the $83 or the $82 level here, then we might be getting ready to join a decline to the downside. So these are my views here on the US oil, but to close on this one, let's run through the 1 hour time frame and let's give a simple view of what we are looking at for today. So like I said earlier, we have two structures here that we will be using to guide our trading activity for today. The first one is this trend line. Hold on a second, let me zoom it out so that we can see things more clearly. So the first one is this bullish trend line here, which as you can see here, price action continued to find higher lows, leading to the engulfing candle that broke out of the $81.50 level. So I told you that there is a likelihood that price might come back to do a retest of the structure to incite another wave of bullish momentum. So we want to be on standby to catch that move when it happens. Then that's the first structure we are using to guide our trading activity for today. And the second one is the $81.50 level here. As we said, we're looking forward to price coming back to do a retest of that structure to give us an opportunity to add more position to our existing trade here. Now, one thing about this structure is, even though we are using it to guide our bullish momentum, our buy position here, a breakdown of both of the structure will be inciting a retracement of that impulse leg. So what are we going to be looking at if this is going to be happening? So if at any point in time price takes us out of our buy position, breaking down both the $81.50 level and the bullish trend line here, then selling pressure below the structure, continued selling pressure on our lower time frame will be a good opportunity to join a counter trend opportunity. And if we join a counter trend opportunity, we might likely see a situation here. Look at what happened here since the beginning of this week. We have this higher lows here, which I was able to identify here. So in that regard, we have this bullish trend line. So if we extend it further into the future here, let me increase the pixels to show the significance of the structure. So we have that bullish trend line on like that. So we might likely have a situation where price comes back to either the bullish trend line here to incite another wave of bullish momentum, or it could break down that structure to the downside. Then we could add more position to our existing trade. So now this is what we are looking forward to. The $81.50 level and that temporary bullish trend line here will continue to guide our trading activities for today. So that is my view here on the US oil for today. If you have any questions, feel free to drop your inquiries in the comment section, and be rest assured that I am willing to be of help in that regard. So let me take some 10 to 15 seconds to read through the chat and see if there are any questions before we move on to the next option. All right, so let's see what we have here. I'm trying to load up my comments. Okay, good morning. Safe Safetel 972, good morning to you. Good morning 8603. Okay, good morning 526, glad to have you around. All right. Battlegate is asking for Ethereum USD for today. Well, I hope I'll be able to trade that for today. Okay, we have some pairs we have been monitoring since the beginning of the week, so we'll definitely go through these pairs first of all, and if we have time, be rest assured that I will be treating it. Okay. All right, so in the absence of no questions, I will be moving on to the next option. And the next option we shall be looking sorry for the breaking transmission, please. So the next option we are going to be looking at this morning is the US tech, and in fact the US tech has been quite choppy in the last 24 hours here, though we had an opportunity that fell along with our expectations yesterday, which was that if we had this bullish trend line figured out here. Hold on a second, let me zoom in so that we can see things more clearly here. So remember, we identified this bullish trend line yesterday, no, in the last week, I guess, which has been holding bullish momentum for the last couple of weeks now. So we saw how that bullish trend line had continued to guide bullish momentum for the last 2 to 3 weeks now. And we said yesterday, we were around here yesterday when we started citing another possible buy pressure coming in at this point, which is likely going to be taking price above that structure to break out of the 11,500 to incite a bullish momentum. And to guide our trading activity yesterday, we added this bearish trend line where we said if a breakout retest of this trend line happens, then we want to be seeing this as an opportunity to buy the US tech. And in fact, that was exactly what happened. So we saw the breakout of that structure, taking us out of our existing buy position. Then we saw a retest of the $11,500 level during the later part of the New York session yesterday to give us a confirmation to buy the US tech. And in fact, we were able to buy, and price moved significantly well, though it moved about 125 pips in our direction before we started seeing some rejection of that $11,600 level throughout the New York session yesterday, in fact into the later part of the New York session and the early hours of today, to further emphasize some level of selling pressure coming in at this point. And with the situation of things right now, as price action appears to have broken down that bullish trend line, remember we said this bullish trend line will continue to guide our trading activity for this week, and with a breakout of this trend line here in a couple of hours ago, it's a very good sign that we want to be joining a bearish momentum at this point. So if you are taking a sell position right around 11,570 here, kudos to you for being on standby to catch that move. That is a very good opportunity you want to be taking there, and let's see how far this bearish momentum will go. But if you had missed out on this opportunity, you could still join at this point. But if you're looking for further confirmation, then we shall be looking at the $11,520 level for additional position on this one. So somewhere up below the 11,520 should be giving us that leverage to add more position to our existing trade. So what we are going to be looking forward to here is if price breaks down the 11,520, and then we look out to add more position to our existing trade. So with the continued selling pressure here, I'm of the opinion that we should not be looking for any buy position here. And with the breakdown of this bullish trend line here, which shares a beautiful confluence with that 11,570, remember that was the level we identified for the week as our resistance point. So this is the resistance point for the week, and we can see how selling pressure had bombarded that area. And in fact, I would like to readjust that what's it called, the resistance level now, based on what we have been witnessing here in the last 24 hours. So if I bring out my line chart here and do some readjustment, so we should be having somewhere around the 11,580. Okay, 11,585 seems most appropriate. So let's have 11,585. So we do some relabeling there, bring back our candle chart, and here we are. So we have a channel now. We have a channel which appears to be transitioning into a reversal pattern between the 11,585 and 11,520 now. So if you had missed out on the breakdown of this bullish trend line here, then the next thing we should be doing now is to look out for a breakdown retest of the 11,520 for an opportunity to add more position or join that decline to the downside. So this is what we are looking forward to, selling opportunities here. So with this being said here, let's scale up to the daily time frame. Let's see how far we think the sell pressure will go if a breakdown of the 11,520 happens at this point. So if we scale up to the daily time frame, we will see things more clearly from an holistic point of view. And here we are on the daily time frame, and let me quickly run through what we saw at the beginning of the year on the US tech for those who are not part of our earlier sessions, so that you can be on the same page with us, and you would also have an inclination into the reason why we have labeled this current structure that we have here. So on the daily time frame here, the first thing we observed is the fact that throughout the course of last year, price action has been on a bearish momentum, and as a result of that, we had this bearish trend line figured out here after connecting the series of lower highs. However, things got more interesting when if we zoom into what has been happening here since the month of June. We saw that as soon as price got into the $11,000 level here, which sellers were trying as much as possible to break down that structure to push price further to the downside, considering the strength of the sellers at this point. But when it got to the $11,000 level, participants in the market saw this price as cheap enough to buy the US tech, and in fact we saw rejection of the buyers here, negating all attempt by the sellers to break down that structure. So we saw the first attempt happen in the month of June, and buyers were able to push price to the upside back into the trend line, and then we saw another rejection and bringing price back into that demand zone one more time at the $11,000 level during the later part of the month of September and the first day of the month of October. So the buy pressure that came in here appeared to be weak, as you can see here. As soon as price tested 11,700, we continue to see some selling pressure come in from that area, negating all attempt by the buyers to break out of the 11,700. And as you can see here, calling our attention to the 11,000, we saw this 11,000 now as a key level we were using to guide trading activity since the beginning of the year, considering how that level had been a strong demand zone for participants in this market. Now, the other structure we identified as a key level is 11,700, and the reason was because of how that level had been a strong selling niche for participants in this market, which lasted about 6 weeks thereabout. And then in the month of November, we saw the breakout of the 11,700, but it didn't last long. We saw a huge consolidation phase between the 12,100 and 11,500, a breakdown of the 11,500 here mid-month of December, that was last month, and price rolled all the way down to the downside. So with the further rejection of this level reversal pattern here, breakout of the neckline of the reversal pattern at the $11,000 level, it gave us an opportunity to buy. So we bought the US tech here. That was last week. We bought it here last week, and we rode the move all the way back into the 11,500. And now this is where the catch is for this week. Let me zoom in so that we can see things more clearly here. So the structure here now focuses more on the 11,500. And why is that so? You saw the breakdown of the 11,500 here last month, and remember this level has been holding strong bullish momentum, holding by pressure. We saw the final breakdown of that structure, and from a technical standpoint, whenever we cite a breakdown of a structure like this, we expect that there is a likelihood that price will come back, do a retest of that structure to incite another wave of bearish momentum. How far that wave is going to go, we don't know at this point, but if we start seeing selling pressure around the $11,500 level here, we will definitely want to be thinking of joining a possible retracement phase. And if we look at the current structure we have here, though we took advantage of a buy position yesterday, you would notice that this level has been showing some strength in sellers at this point. As you can see, sharp rejection of the area between the 11,500 and the 11,650 or $620 area since in the last 24 hours now. So you can see we have been seeing some selling pressure around this area. So at this point in time, we might be looking forward to some selling momentum coming in at any point in time, which might likely come in the form of a breakdown of the 11,500 to incite another wave, probably a retracement of that previous impulse leg here back into the $11,000 level. So what we want to be doing here is to look at the structure critically. Let's understand what's really happening around here. Then we make a decision based on the current structure that we have there on our lower time frame. So with that information we have here, I hope we're on the same page now. You understand why we have gotten to this level. So we shall be scaling down to the 1 hour time frame, back to the 1 hour time frame, and look at our structure again. So like we identified on the daily time frame, we identified some selling pressure around 11,620, which we can see here as the sharp wick, making the candle close in the form of a shooting star. From a technical standpoint, that is a candle revealing that there is some level of selling pressure in this market. And with a breakdown of this bullish trend line, a bullish trend line which has been holding bullish momentum for how long that is, let's check for how long that is. Okay, since the beginning of the year. So we have this trend line has been holding bullish momentum since the beginning of the year. And one thing we are going to be doing now is to use that trend line to guide selling momentum at this point. So what we are going to be doing now, like I said, we've cited a breakdown of that bullish trend line. So if we need further confirmation here, we might likely see a situation where price breaks down, then at one point in time comes back to do a retest of structure followed by selling pressure. Then we could add, if you're already not in this trade yet, add a position. Then if the bearish momentum continues to the downside, then a breakdown of the 11,520 will be giving us another opportunity to add more position to our existing trade. So that is how we are going to be selling the US tech for today. However, if price takes us out of our sell position in such a way that it breaks out of 11,585, taking out all the sell position here, followed by buying pressure above the structure in our lower time frame, then we might likely be seeing the breakdown of this trend line as a false one, as the bullish trend line is still strong enough to hold bullish momentum. So this is what we are going to be looking forward to buy the US tech for today. So let's be patient. We're already in a sell position here. If you are taking advantage, I told you earlier, we're already in a sell position here. Continue to monitor price action, and if a further breakdown of 11,520 happens, we had more position. However, if we get taken out of this position, then we might likely be getting ready to join another wave of bullish momentum above the 11,585. So that is that on the US tech for today. If you have any questions, feel free to drop your inquiries in the comment section while I move on to the next option. And the next option we are going to be looking at this morning is the GBPUSD, and in fact the GBPUSD has moved significantly in our favor, as we have about 3 positions running at this point. Now, where were we during the live session yesterday? Okay, during the live session yesterday, we were around, all right, okay, we were around here. We were around the 1.22500 level, and remember we bought at the 1.2200 level after citing some buy pressure coming in from this area. So we anticipated a breakout retest of the 1.22200 level, which was a good opportunity for us to buy at that point. Then I told you during the live session yesterday that if another breakout of the 1.22500 level happens, retest of that structure will be giving us an opportunity to buy. And in fact, price moved as expected. We saw the breakout, we saw retest. In fact, we had multiple retests of that structure. If you're an aggressive trader, you must have had multiple entries from that level. But if you are a passive trader like me, well, you only have one position running from that point. So we had the first position here at the 1.220 level. We had the second position here at the 1.22500, and we also had a structure at the 1.22900, which I stated that if a breakout of that level happens, we want to be adding more position to our existing trade. And this is exactly what happened during the early hours of today. We saw the breakout of that structure, giving us that leverage to add another position to our existing trade. So if you had been part of this profitable journey, if you have been part of this from this level here, you will be having about 130 pips in profit. And for the second position from the 1.22500 level, you will be having about 98 pips in profit. And if you are taking it from this level here, you will be in about 57 pips in profit at this point. So congratulations to everyone who has been part of this trading journey. So the next thing we want to be doing now is to lock in our profit. We don't want to lose out on what we have gained so far. So at this point, I will be suggesting that we move our stop loss to the previous structure here at the 1.23250 level or 23200 area, somewhere around here. Move your stop loss there, and let's see how far this trend is going to go. Well, for me personally, I had my TP target at the 1.23700, where I said I want to see how price action will react to that level to decide if I am going to be adding more position to my existing trade, or how we'll be getting ready to join a bearish momentum from that level. As you can see that with the breakout of the 1.22900 level, the position, the retracement here is long overdue. So I don't know what's going to happen around the 1.237. So I have my TP target around there, and we have about how many pips for price action to get to my TP target here? That's like 25 pips to get to that TP target at this point. So let's look at the daily time frame. Let's see if the bullish momentum here still has a potential of climbing further than this, or there is a likelihood that we have a selling niche on our higher time frame around this area that might likely incite a sell-off. So we want to make sure that we are on standby to catch any of this move when they happen. So in that regard, I will be scaling up to the daily time frame, and here we are on the daily time frame, and this is the structure we have on the daily time frame. So for the sake of the session, I will just dive into our expectations since the beginning of the week. Remember, we had this key level at the 1.200 area, which we said shall be guiding our trading activity for the year. And we also have this bullish trend line also, which has been guiding bullish momentum since the month of September of last year. And as you can see, price has consistently respected that bullish trend line. Buy pressure above the bullish trend line here, sharing a beautiful confluence with the 1.200 level, and price had continued to find higher highs from that point. Though we had a little choppy situation here last week around the between the 1.22500 level and the 1.2100 area, which was the support level of that channel. And if you remember what I said last week, that if price breaks out of the 1.22500, it will be a good opportunity for us to buy, as price has broken out of that consolidation phase that held the situation here for 5, 6, 7 days here. So now with the breakout of the 1.22500 yesterday, that was a good signal that buyers have come to stay here. And I told you I have my TP target around the 1.23700 level, and in fact you could extend your TP to around the 1.2400 area. As you can see, that level has been a major determinant of price action throughout last year. Let's see what happened throughout last year on this one. Okay, so you can see how that 1.2400 level had been a major determinant of price action, and you can see selling pressure right here during the course of last month's trading session. So you could extend the TP to around the 1.240 level, and let's wait and see how price action will react to that level. So we have a selling niche around the 1.2400 level, so we wait and see what happens. If we start seeing selling pressure from that level, we might likely be looking forward to a sell-off. And if price breaks out of the 1.240 level, we might be looking forward to an opportunity to buy or add more position to our existing trade on the GBPUSD. So these are my views here on the GBPUSD. So I hope I'll make things a little bit simple for you to look out for trading opportunities during the New York session today. And let's go back to the 1 hour time frame. So for those who had missed out on this opportunity, well, what I'll be saying here is that we should just remain patient here. If you had missed out on the buy position we have been enjoying here in the last 48 hours, I would advise that you remain patient. Let's see if, since we have a breakout of the 1.2290 level during the early hours of today, it is very possible that price will come back and do a retest of the structure, and if buy pressure happens above the structure in our lower time frame, then we can join that rally to the upside. But if that does not happen, well, I would advise us to remain patient for price to get into the 1.240 level, which we identified on the daily time frame, where we said we shall be looking out for trading opportunities. If a breakout of the 1.24 happens, then we get ready to buy, and if selling pressure resumes below the 1.2400 level, we will be getting ready to sell the GBPUSD for today. So that is that on the GBPUSD. If you have questions, feel free to drop your inquiries in the comment section. As usual, I'm running out of time and I need to run through 2 more pairs today, and we have the XAUUSD. Let me run through the chart quickly and see what we have here. Okay, Selfine 537, good morning to you. JNP, good morning. Hey, Steamroller, good morning. How are you doing today? Oh, you late a little bit. All right, I'm glad to have you around here as well. I hope you're having a wonderful day at work. Okay. All right, so in the absence of no questions, I will be moving on to the next option, which is the XAUUSD. And in fact, the XAUUSD has been a little bit choppy, but we were able to ride some bearish momentum since the beginning of the week. Remember, we took some selling opportunities right below the $1,920 level here, and we rode the move all the way down. We had a position below the $1,916. Added another one below the 1,920, and price broke down the 1,905 level before we saw the this bullish momentum that began during the early hours of today. So on the XAUUSD, we had some profits. I think almost about 3,000 or 4,000 pips in total if you had multiple entries running on the XAUUSD since Monday. And with the breakout of the trend line here, which has been guiding bearish momentum, hold on a second, I want to show you something here which will make things clearer. So I would like to zoom my screen out a little bit so that you can see things more clearly. So since the beginning of the week, we saw selling pressure began at the 1,929 level, which was our resistance level for this week, and since then price had continued to find lower lows and lower highs, and as a result of that I connected the series of lower highs here, and we have this beautiful trend line which we shall be using to guide trading activity going forward. Now, with the breakout of this trend line here during the early hours of today, it's a very good sign that this bearish trend line here may no longer have the capacity to hold selling pressure anymore. But one thing about this current structure that makes it a little bit dicey is the fact that the 1920 has been a strong selling niche. And during the early hours of today, after citing the breakout of the structure and the breakout of the 1920, I saw a retest of that level on my lower time frame, and I joined that bullish momentum from that point. But till now, I'm still not sure if this bullish momentum will continue, considering the fact that we have been noticing some huge traction in the US dollar across all the major pairs. And looking at the XAUUSD here, the breakout of this trend line could turn out to be a false breakout. And if that happens and turns out to be a false breakout, we might likely see a plunge in price. And remember that we have a macroeconomic event coming up in how many hours from now? I think about an hour 30 minutes from now, we have a macroeconomic event coming up in the form of the retail sales, which is agreed to be a high impact event. And most importantly, prior to such event, we normally see major influencers in the market gradually bringing some liquidity into the market, and if that happens, we might likely see a huge spike in price movement. And with the structure we have here and the breakout of this trend line, I'm still very skeptical about this. Though I have a buy position above the 1920. If you are taking advantage of that, kudos to you. But one thing I'll be advising you to do right now is to move your stop loss to the entry point here, just to protect that position against any sudden plunge that might happen from this point. But if price now continues to climb to the upside, breaking out of the $1920 level, then my confidence in holding on to my buy position will increase. So what I'll be looking forward to here, even though I have a position running at this point, I've moved my stop loss accordingly to lock in some profit. So we shall remain patient. If you had missed out on that opportunity, I would advise you to remain patient, as we want to see how price action will be reacting to the $1920 level here to decide if we are going to be adding more position to our buy position here, or we will be getting ready to join a sell momentum. And the reason why we will be looking at how price action will react to this level, if we go to as far back as Friday last week, we saw selling pressure from that level. Though we saw a breakout of that structure during the beginning of this week, we can see that 3-4 hours afterwards, price dropped below that level, and since then price has been trading below that structure to emphasize some level of selling strength at this particular point in time. Now, price appears to be heading towards that selling niche, so we need to be very careful. Watch out to see how price action reacts to that structure, and if at any point in time we sight a breakout retest on that level on our lower time frame, then we will have no choice but to add more position to our existing trade, and we continue to guide our position judiciously. Move your stop loss accordingly as price action moves in our favor. And if a further breakout of the $1929 level happens, which is the resistant level for this week, remember that's our resistant level for this week. If a further breakout of that level happens, then it will also be another good opportunity to add more position to our existing trade. Now, in as much as we are looking forward to buy an opportunity on the XAUUSD, we should not ignore the possibility that sellers could come in at this point. Despite citing the breakout of this trend line here, let me readjust this trend line and take on this lower high here. Okay, so we have it. So there is a likelihood that price, this structure, the breakout of the structure could turn out to be a false one, where price might likely drop below the 1920 and at the same time drop below this bearish trend line, and then selling pressure below both of the structures here could likely incite another wave of bearish momentum. And if a further breakdown of the 1905 level here happens, a level which we cited by pressure here during the New York session yesterday, and you can see we had the breakdown of that structure to emphasize some selling strength here. So if a further breakdown of the 1905 level happens, we want to be adding more position to our existing trade. So we want to be prepared for either of the situations to happen. So let's keep the options of selling opportunities in mind too, as well as we look out for buying opportunity on the XAUUSD. So on this note, I will be moving on to the last pair for today, and the last pair we are treating for today is the EURJPY. This was introduced by Steamroller on Monday, and we have a profitable situation here on the EURJPY, and in fact price action moved as expected yesterday. So prior to the live session yesterday, we had a buy position running, and I told you to move your stop loss to lock in some profit somewhere around here. And one thing I made mention of during the live session yesterday is that we want to be using this bullish trend line here to guide our trading activity. So one thing we said about the bullish trend line is that if price action continue to remain above the bullish trend line and the 139.250 level, we want to feel comfortable in our buy position. However, if price breaks down that structure, it will be a good opportunity for us to sell. And in fact, that's exactly what happened. We saw the breakdown of that structure. I hope you took advantage of it, and if you did, well done, as you would have taken about 100 pips in profit before another wave of bullish momentum happened. Now, talking about this breakdown of the bullish trend line here, remember I said something about the 138.00 level. Let me bring that out a little bit so that you can see what I'm talking about here. So that is it. So remember I told you something about the 138 level here, where I said we shall remain patient at the structure. We'll move our stop loss accordingly, lock in some profit if we take advantage of the sell position here, and if a breakdown of the 138.00 level happens, we want to be adding more position to our sell trade. But if we start seeing buy pressure above the 138.00 level, it will be a good opportunity for us to buy. And in fact, this is exactly what happened here. We saw buy pressure come in here during the later part of yesterday's trading session. We saw multiple rejection of the 138 level by buying pressure, and that was a beautiful reversal pattern. So if you had missed out on the structure here, then the breakout of the neckline retest will be another opportunity to add more position to our existing trade. So I want to congratulate every one of you who are taking advantage of this move, as this buy position here that started yesterday moved about 350 pips in our direction, and some people will have taken their profit. But if you had not, well, I will be advising that we move our stop loss to somewhere around the 140.00 level, which is a new structure I was able to identify during the early hours of today. So with the selling pressure coming in above the 141.700 level, as you can see, selling pressure that continues to drop to the downside, move your stop loss accordingly if you are still in this trade. But if you are not, you have taken your profits, okay? So what we are going to be looking forward to is to see if we are going to be seeing another wave of bullish momentum coming at this point. So with a structure around the 140.00 level and the 139.600, we shall be looking out for buying opportunity around that area during the New York session today. So what are we going to be looking forward to around this level to join another wave of bullish momentum? Well, we want to, following this impulsive move to the upside, which is the impulse leg right now, and the sell momentum we have been witnessing here since the early hours of today will be seen as a retracement of that impulse leg. So we want to see price, how far this retracement phase is going to go. Is it going to stop at the 140, or is it going to stop at the 139.600? But the most important thing we want to be seeing is a reversal pattern. It could be a double bottom structure, it could be your head and shoulder pattern, whichever case it may be. Breakout retest no lower time frame, then we want to be joining another wave of bullish momentum. Now, to project where this retracement phase is likely going to be culminating, we want to be using our Fibonacci retracement tool as usual, and then we want to be aiming at our golden zone area, which is between the 50 and the 78.6% of that previous impulse leg. So we should be having somewhere between here. So for the sake of clarity, we shall be identifying this level as our buy zone. I'll place this right inside that box, give it a green color, and then we have this one a yellow. So here we are. Let's delete this one. So right now, so I will just adjust this a little bit. So I want to be using between the 140 and the 139.900 level as an area we shall be looking out for buy opportunity. So what we want to be looking forward to on lower time frame, anywhere right around the buy zone or above the 140 level here, we want to see a reversal pattern on our lower time frame so that we can join that rally to the upside. So this is what we are going to be looking forward to buy the EURJPY for today. So let's remain patient at this point and let's see if price will do some consolidation phase around our buy zone, evolving into a trend continuation pattern to evolve into a reversal pattern that will be inciting a trend continuation to the upside. So let's be on standby to see how price action reacts to this buy zone during the New York session today. And remember, we still have this bullish trend line which we said is going to be guiding our trading activity, and it's still very valid as a breakdown. If a breakdown happens, we want to look out for a retest of structure selling pressure to join that decline to the downside. We are not selling the breakdown outrightly, considering the fact that we are within a buy zone here. So if a breakdown of that level happens, don't jump into any sell, because it could still turn out to be a reversal pattern to push price to the upside. So what we want to be looking forward to sell is if a breakdown of that level happens, price action does a retest to structure, selling pressure continues on our lower time frame, breakdown retest to structure, then we want to be joining that decline to the downside. But for me at this point, I'm still tending towards a bullish momentum here, so I will continue to look out for buying opportunity within the 140.00 level and the 139.00 area. So that is my view here on the EURJPY. I hope I made myself clear. If you have any questions, feel free to drop your inquiries in the comment section as usual. Safe 1973 is asking if gold is going down or up. Well, I think I explained that. If you are not part of that session, well, stay tuned in, as I will be doing a recap of what we talked about today, and you could catch the idea as we move on to the recap session. So first of all, we talked about the US oil for today, and we remember we are already in a profitable trade. So we have about 3 positions running at this particular point in time. We took advantage of this one here at the $79.50 level. We had a position at the $80 level. We had another position at the $81.50 level, and price has continued to find higher highs and higher lows. And for those who had missed out on these opportunities that we took advantage of here, we said you remain patient. Remember, we are still within a strong supply niche between the $83 level and the $82 area, and I said what we should be looking forward to is price coming back to do a retest of the structure, then we could actually join a rally to the upside. But if that does not happen, we should remain patient and wait out for a breakout retest of the $83 level to give us that opportunity to join. And for those who are already in this trade, I've told you to move your stop loss accordingly, and around the $81 is it $81.1, I told you to move your stop loss too, so that we can give some breathing space for price action to move around before another wave of bullish momentum might likely happen from this level. And to make our trading activity easy for us during the New York session today, we identified 2 structures we shall be using to guide trading activity, and the first one is the $81.50 level here, and then this temporary bullish trend line we were able to identify after connecting the series of higher lows. So as long as price remain above both the structures, we remain comfortable in our buy position. However, if a breakdown of that structure happens followed by selling pressure below that level, this is likely going to be a retracement phase where we might be looking for another wave of bullish momentum from this point or from the $80 level. So let's be on standby to catch any of this move when they happen. So best of luck on that one. Then we went on to talk about the US tech, and on the US tech, we triggered a sell position this morning after citing the breakdown of that structure. And the one thing I will say here, considering the fact that buy pressure appears to be resuming one more time, let's have our stop loss right above the structure here. And let's, for the sell position rather, let's have our stop loss right above that level, and then we have a buy stop sitting right above the 11,585. So if the buy position continues, we have our sell position taken out, and the buy position will continue to ride all the way up to the upside. But if the sell position here continues to the downside, we will be glad. That is, selling pressure breaking down the 11,520 will be welcoming another position, another opportunity to add another position to our existing trade here. So that is one scenario. That is the scenario we are looking forward to on the USA. Is quite simple. So we have the bullish trend line and the 11,585 level guiding our trading activity for today. Then we went on to talk about the GBPUSD, which is profitable at this point. Remember, we have 3 positions running here. We took advantage of the buy position above the 1.22200 level. We bought at the 1.22500 level, and we added another position at the breakout of the 1.22900 area. And for those who are ready in this trade, we have moved our stop loss to around the 1.232, and I told you that I have my TP target sitting around the 1.237, which price action, it remains about 15 pips for price action to hit my TP target. Though for those, we remember we identified a structure at the on the daily time frame at the 1.24 area where I said we could actually extend our TP to. You could do that as well, but for me, I'm just okay with the 1.237 with 3 positions running at this point. Now, for those who had missed out on this opportunity here at the breakout of the 1.22900, I have said that let's remain patient and see if price action will do a retracement back into the 1.22900 to incite another wave of bullish momentum. So that is what we are looking forward to buy. However, if during the New York session today and prior to the macroeconomic event or post the economic event, price drops below the 1.22900 and selling pressure resumes below the structure, I will be looking forward to selling, and a further breakdown of the 1.22500 will incite another wave of bearish momentum. So let's be on standby to catch either of these positions while we have moved our stop loss accordingly to lock in our current sell position. Then we also went on to talk about the XAUUSD, where we have been enjoying some sell momentum since the beginning of the week. Remember, we had some couple of positions running after price broke down the $1,920 level. Another one here, another one here. Though I didn't have anything here because it was late early on in this morning, so I was asleep when this one happened. And if you had done that, well done to you. So we had about over 3,000 to 4,000 pips in profit before this bullish momentum happened. And with a final breakout of this trend line here, which has been holding selling pressure since the beginning of the week, I'm of the opinion that this bearish trend line might not be strong enough to hold bearish momentum. However, as long as price remains below the 1,920, there is still a tendency that sellers are still as a likelihood of coming in this market. Though we took advantage of this buy position at the 1,920, and I told you if you are taking advantage of this one, well, move your stop loss to break even at this point, as there is still a tendency that this breakout could turn out to be a false one. And if a false breakout happens, if it is a false breakout, then we want to be seeing price drop below the 1,920, selling pressure below the 1,905 for another wave of bearish momentum. However, if price continues to go to the upside here, well, we'll feel comfortable in our buy position. And for those who had missed out on the opportunity here at the breakout of the 1,920, well, I said remain patient. If price breaks out of the 1,920, then it will be a good opportunity for us to buy. And if for the breakout of the 1,929 will be another opportunity to add more position to our existing trade. So let's be on standby to catch either of those positions when they finally happen. Then we went on to close the day with the EURJPY, and on the EURJPY we are quite profitable on this one as we rode the move all the way to the upside, which price move about 350 pips move after the breakdown of the trend line here, which gave us about 100 pips during the New York session yesterday. So with the current situation we have here, and after testing the 141.700, we have been witnessing some selling pressure, so we have decided to remain patient and see how far this retracement phase is going to go before another wave of bullish momentum will happen here. So we are looking at an area between the 140 level and the 139 0.00 area for buying opportunity. So what we want to be seeing here basically is a reversal pattern. It could be a double bottom structure, or it could be an inverse head and shoulder pattern. Then we scale down to our lower time frame, look out for breakouts of structure, then we could join the trend continuation to the upside. So these are my views here on the EURJPY, and we were able to successfully review the US oil, the US tech, the GBPUSD, XAUUSD, and the EURJPY. So we have 5 good trading opportunities that we are going to be looking forward to during the New York session today. So thank you for your attention. I really appreciate every single one of you, and I wish you best of luck during the New York session, as I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time. Let's come here again to review all the pairs we have been monitoring since the beginning of the week and get ourselves prepared for the New York session tomorrow. Thank you once again for being around. I really appreciate, and I wish you best of luck during the New York session. Do have a wonderful evening. Bye-bye.